Hey, real quick before we get into this, I need you to stop whatever you're doing for the next few minutes because what I'm about to tell you directly affects your money, your privacy, and honestly how much control you actually have over your own financial life. And I'm not talking about some far-off government conspiracy theory. I'm talking about things that are already happening right now inside the system that holds your paycheck, your savings, and your future. So stay with me, because this one is going to open your eyes. Let me ask you something. You ever deposit a few $1,000s in cash at your bank? Maybe you sold something. Maybe it was birthday money. Maybe you just had a good week and you walked away thinking nothing of it. Or maybe you've transferred money between accounts, sent some cash to a buddy, or moved funds around and thought, hey, that's my money. That's my business. Here's the thing though. Your bank might not see it that way. And more importantly, the federal government might not either. There are rules and systems already in place right now, today, where your bank is legally required to report certain financial activity directly to the government. Not because you're suspected of a crime, not because a judge signed a warrant, but simply because of the amounts involved or the patterns they think they see. And with some new proposals that have been floated around in recent years, that net could get a whole lot wider. We're talking about the government potentially knowing about nearly every transaction you make. Every single one. Now, I know some of you are already thinking, Marcus, I've got nothing to hide, so why should I care? And look, I hear you. But this isn't really about hiding anything. It's about something much more fundamental. The idea that in America, you should have a right to privacy in your own financial life, unless there's an actual reason to look deeper. Stay with me, because by the end of this video, you're going to understand exactly what's happening, what it could mean for you personally, and what you actually need to know to protect yourself. And trust me, the details here are going to surprise you. Before we go any further, if this kind of content is what you're looking for, where we break down financial systems, government policies, and what they actually mean for regular Americans like you and me, go ahead and hit that subscribe button right now. We drop videos like this every week, and you do not want to miss what's coming up. All right, let's get into it. So let's start from the very beginning, because to really understand what's happening today, you need to know how we got here. The story of banks reporting your financial activity to the government goes back decades. After the chaos of the 1970s, when drug money, tax evasion, and offshore accounts were running rampant, Congress started building a framework to track the flow of money in America. The idea was simple on paper. Follow the money, find the criminals. What ended up happening, though, is a system that now touches the financial lives of millions of perfectly ordinary, law-abiding Americans every single day. The first big piece of this puzzle is something called the Bank Secrecy Act, which was passed back in 1970. Now, despite the name, this law doesn't protect your banking secrecy. It does the opposite. It requires banks, credit unions, and other financial institutions to cooperate with the federal government in detecting and preventing money laundering and financial crimes. Under this law, your bank isn't just your bank. It's also, in a very real sense, a government informant. And the reporting requirements that came out of this law are still active and still very much in use today. Here's where it gets really specific. One of the most well-known reporting requirements is called the Currency Transaction Report, or CTR. If you make a cash transaction deposit, withdrawal, or exchange that totals more than $10,000 in a single day, your bank is required by law to file a CTR with the Financial Crimes Enforcement Network, which is a bureau inside the US Treasury Department. No exceptions. No judgment call. The bank doesn't decide whether you seem suspicious or not. It's automatic. It's mandatory. And you are not required to be notified. $10,000 in cash, and the government knows about it. Now, a lot of people hear that and think, okay, $10,000 is a lot of money. That doesn't apply to me. But hold on, it gets more complicated. Because there's a second category of reporting called structuring, and this one trips people up constantly. Structuring is when someone breaks up a larger amount of money into smaller transactions, specifically to avoid hitting that $10,000 threshold. So let's say someone has $12,000 in cash and they deposit $4,000 3 separate times over a few days. If a bank sees a pattern like that and believes it might be intentional, they can flag it, and they are required to report it as a suspicious activity report, or SAR. Here's the wild part. You don't have to have actually broken any law for a SAR to be filed on you. A bank employee just needs to believe that a transaction is suspicious. And once that report goes to the government, you have no right to know it was filed. In fact, the bank is legally prohibited from telling you. So your financial activity can be reported to federal authorities, and you won't know it happened. SARs are filed hundreds of thousands of times every year. We're talking about well over 1 million suspicious activity reports filed annually across the US banking system. And while many of those reports do involve actual bad actors, a significant portion involve ordinary people who had no idea they were doing anything unusual. Maybe they frequently deal in cash because of the type of business they run. Maybe they've been pulling money out regularly to help a family member. Maybe they just don't trust the banking system and like having cash on hand. None of that is illegal. But it can still get you flagged. And then there's the FBAR, the Foreign Bank and Financial Accounts Report. If you're an American who has a bank account or financial account in another country with a value that exceeded $10,000 at any point during the year, you're required to file an FBAR with the Treasury Department. This one catches a lot of Americans off guard, especially people who are born abroad, who have family overseas, or who do any kind of international business. Fail to file it even accidentally, and you can face penalties that are shockingly harsh. We're talking fines that can reach up to 50% of the account's value per violation in some cases. 50%. For a paperwork error. So we've got CTRs, SARs, and FBARs already in place and already touching the lives of millions of Americans. But here's where things get even more interesting. And honestly, where the real controversy started heating up in recent years. Back in 2021, as part of a push to find new ways to fund government spending and crack down on what some officials called the tax gap, the difference between what Americans owe in taxes and what they actually pay, there was a proposal floated by the Biden administration that would have required banks to report to the IRS the total annual inflows and outflows of nearly every bank account in America. Not just cash transactions over $10,000, not just suspicious activity, just all of it. Any account that had more than $600 in annual transactions, which is essentially every bank account in America, would have had its total yearly inflows and outflows reported to the IRS. Think about what that means for a second. Your landlord's account, your barber's account, your neighbour who sells stuff on the side, your mum who gets a couple $100 a month from you to help with bills, all of them would be captured in this reporting dragnet. The government would know how much money is flowing in and out of virtually every bank account in the country. The proposal argued this would help the IRS identify people who underreport their income. And look, nobody wants to defend actual tax cheats. But the scale of surveillance this would have created was breathtaking. The backlash was enormous. Banks and credit unions across the country pushed back hard. Civil liberties groups raised serious concerns. Millions of Americans who heard about this were genuinely alarmed. And ultimately, the $600 threshold proposal was dropped. But here's what you need to understand: it was dropped from that specific bill, in that specific moment. The underlying appetite for this kind of financial surveillance hasn't gone away. The framework for it already exists. The technology to do it already exists. And the argument that it's necessary to close the tax gap is still being made by some in Washington. The version that did survive, modified and reduced in scope, still required some additional reporting, primarily focused on certain business accounts and transactions. But the very fact that a proposal this sweeping got this close to becoming law should tell you something important. The trend is moving in the direction of more financial reporting, not less. And that has real implications for how you think about your money. Now let's talk about what this actually means for a regular American guy going about his life. Let's say you're a contractor who works for yourself. You get paid in cash pretty regularly. You deposit that cash at your bank. You pull money out sometimes to pay workers under the table because that's how a lot of cash-based trades operate. You might not even think twice about it. But from a bank's automated system perspective, you could be triggering all kinds of flags. The deposits, the withdrawals, the patterns. And at some point, without you ever knowing, a SAR might get filed, your account might get scrutinized, and eventually you might get a letter from the IRS asking some very uncomfortable questions. Or consider this: you're an American living abroad, maybe working remotely, or retired in another country. You've got some savings in a local bank account there, you're hitting 5 figures in that account. Do you know about the FBAR? Do you know you're supposed to file it every year? Do you know what happens if you don't? Most people don't, and the penalties are completely out of proportion to any harm done. People have been financially destroyed by FBAR penalties for honest, non-criminal mistakes. Or imagine this scenario. You're a small business owner. Your revenue comes in, your expenses go out, and at the end of the day, you're just trying to keep the lights on and take care of your family. You're not cheating on your taxes. You're not laundering money. You're just doing business. But your account has a lot of transactions, lots of money coming in, lots going out. Under any expanded reporting regime, the IRS would have a detailed picture of your financial activity without ever having audited you, without ever having had cause to look deeper. And the question becomes, what do they do with all that data? Who sees it? How long is it kept? What happens if there's a mistake? These are not abstract questions. They are questions that go to the heart of what financial privacy means in America. The Fourth Amendment protects you from unreasonable searches of your home and your person. But courts have long held that information you voluntarily share with a third party, like your bank, has reduced privacy protections. It's called the third-party doctrine. And it was established back in the 1970s, before digital banking, before smartphones, before your entire financial life was contained in an app on your phone. The legal framework hasn't fully caught up to the reality of modern life, and that gap is something that affects every one of us. Here's the thing about all these reporting systems. They were built with a specific kind of criminal in mind. The drug dealer moving large amounts of cash, the offshore tax evader hiding millions in a Swiss account, the money launderer running dirty money through shell companies. And yes, these systems do catch some of those people. They serve a real purpose in that sense. But when you build a massive surveillance infrastructure designed to catch bad actors, you inevitably sweep up a lot of people who aren't bad actors at all. And the costs of that in time, in stress, in legal fees, in the chilling effect on how ordinary people use their own money, those costs are real, and they fall on real people. Law enforcement agencies have access to these reports in ways that aren't always fully transparent to the public. The Financial Crimes Enforcement Network, known as FINTCEN, maintains a massive database of financial reports that can be accessed by federal, state, and local agencies. That information can be shared in ways that aren't always fully explained to the public, used in investigations that might start for one reason and end up going in a completely different direction. Once information about your finances is in a government database, you have very little control over what happens to it. And here's something most people don't realise: just because you've never been accused of a crime doesn't mean your financial records haven't been looked at. Under the Bank Secrecy Act, the government doesn't need a subpoena to access many of these reports. The information flows directly to federal databases, and access is granted broadly to authorised agencies. You would never know if someone ran your name through those systems. You would never receive a notification. You would have no opportunity to object or to provide context. Now, is any of this necessarily malicious? No. Most of the people working in financial intelligence and law enforcement are genuinely trying to do their jobs and protect the public from real financial crimes. But good intentions don't eliminate the risks that come with massive systems of surveillance. History is full of examples where tools built for one purpose got used for others, where data collected for legitimate reasons got mishandled or misused, where people who thought they had nothing to worry about found themselves in the middle of a nightmare they never expected. The conversation about financial privacy in America is not going away. In fact, it's getting more urgent. As more of our lives move digital, as payment systems get more connected and more transparent, as the government's appetite for financial data continues to grow, the question of where to draw the line becomes more important than ever. It's a question about power, who has it over your financial life, and about rights, what protections you can actually count on. Some people on one side of this debate say, look, if you're paying your taxes and you're not doing anything wrong, you have nothing to fear from any of this reporting. And honestly, that argument is not crazy. Financial transparency does help catch actual criminals. It does close real gaps in tax collection. There are legitimate reasons why some level of reporting makes sense. But the other side of that argument, the side that says your financial privacy is a fundamental right, that the government shouldn't be building a surveillance architecture over your bank account unless there's specific cause to look, that side has merit too. And in America, We've always taken seriously the idea that rights matter even for people who have nothing to hide, because rights exist to protect everyone, not just the ones who need them right now. What you need to take away from all of this is this. These systems are real. They are currently operating. They affect ordinary Americans every day, often without their knowledge. The cash transaction reports, the suspicious activity reports, the FBAR requirements, these are not theoretical. If you deal in cash, if you have foreign accounts, if you move money in patterns that could look unusual to an automated system, you could be in these databases right now without knowing it. That's not meant to scare you. It's meant to make sure you're informed. Know the thresholds. Know the rules. If you're a business owner who regularly handles cash, talk to your accountant about how your transactions might look to a bank's compliance system. If you have foreign accounts, make sure you understand your FBAR obligations and get them right every year. If you're doing any kind of financial planning, make sure your advisor knows about all of your accounts, domestic and international, so you don't get caught flat-footed by a reporting requirement you didn't know existed. Knowledge is protection. Not because knowing the rules lets you get around them, but because knowing the rules lets you make smart decisions about your money, stay compliant, and avoid the kind of surprises that can turn a routine financial matter into an expensive headache. The broader question, whether the government should have more or less access to your financial data, where the line should be, how to balance legitimate law enforcement needs against individual privacy rights, that's a debate that's going to keep going in Congress, in the courts, and in the public square for years to come. And it matters. It matters who you elect, what policies they support, what oversight structures exist to prevent abuse. These are not small questions. They're questions about the kind of society we want to live in and the kind of relationship we want to have between citizens and their government. And here's what gets me every time I dig into this topic. Most people have absolutely no idea how much of their financial activity is already visible to the federal government. They assume they have more privacy than they do. They go about their lives making deposits and withdrawals and transfers, thinking none of that is anybody's business but their own. And for a lot of it, they're right, the routine stuff flies under the radar. But the system is bigger, and it's watching more than most people realise. And that gap between what people assume and what's actually happening, that's the gap I want to close. Right here on this channel. So here's where I want to hear from you. Drop a comment below and tell me, did you know about any of this before watching this video? Did you know about the $10,000 cash reporting threshold? Did you know about suspicious activity reports? Did you know about the FBAR? And more importantly, how do you feel about it? Do you think the government's access to financial data goes too far? Or do you think it's a reasonable price to pay for a system that catches criminals and closes the tax gap? There is no wrong answer here. This is a real debate, and your voice matters in it. And if you know someone, a friend, a family member, a co-worker who runs a cash-heavy business, who has bank accounts abroad, who moves money in ways they've never really thought about, from a legal standpoint, share this video with them. Seriously, it could save them from a serious headache down the road. All you have to do is hit that share button. It takes 2 seconds, and it could make a real difference. And if you are not subscribed yet, what are you waiting for? Hit subscribe, turn on notifications, because I am just getting started. We have videos coming up on how the IRS actually decides who to audit, what the government can see when they freeze your bank account, and how to legally protect your assets in ways most people never think about. This is the content that matters, and I want to make sure you don't miss a single video. Thank you for spending time with me today. Stay informed, stay smart with your money, and I'll see you in the next one.